Are investors going to crash the real estate market in 2023? That's the chatter going around YouTube, so let's dig right in. The basic argument is that investors flooded the housing market in 2021, but are now fleeing in droves. At peak, investors were buying 1 in 5 homes sold in America, and in some markets, over 30% of single-family homes were being gobbled up by investors, who are now running for the exits. Opportunistic buyers charging into a bubbling market only to flee when prices drop? Sounds familiar, right? Kind of like 2008, right? YouTuber and once proud day trader MHFIN has gone viral with his video directly linking the current investor exodus with the last housing crash. He points out that subprime mortgages sank the housing market in 2008, even though they accounted for only 13% of mortgages. Good God! If 13% of buyers back then could cause that much damage, how much more damage are we going to see in 2023 by the 20% of buyers who are investors? That's the ominous question that former options guru MHFIN and these other YouTubers pose, but don't answer. Don't even try to, even though most of the answers are hiding in plain sight. In sales data, in quarterly financials, even in a pretty explosive and publicly available congressional subcommittee memorandum. So in this series of 3 videos, I'm not just posing the question to scare my audience like these other YouTubers do. I'm doing the research to determine the answer. Will investors crash the housing market in 2023? And we'll start by looking at the most likely culprit, the iBuyers. I'm Jon Schwartz, real estate investor and realtor in Los Angeles, California, and my channel is all about helping home buyers, home sellers, and new investors make sense of this absurd market. This video is the first in a series of 3 asking the question, will investors crash the market in 2023? Please subscribe so you don't miss parts 2 and 3. So, the iBuyers are a couple of tech companies who tried to bring the tech business model to house flipping. And by tech business model, I mean these companies raised a ton of money in order to operate at a loss with the hope that eventually, at scale, they'd turn a profit. Sounds dumb, but Amazon lost money for its first 6 years, and Tesla didn't turn a profit for a decade. So the model can work, but it can also fail in spectacular fashion. Google Pets.com for the classic example. For the iBuyers, things are looking really bad. Zillow shuttered its iBuyer arm in 2021. Redfin quit iBuying in 2022. Opendoor, the biggest iBuyer by far, is teetering on collapse with a stock price that has fallen 97% from a pandemic high of $34 to now about $1. And OfferPad, the second largest iBuyer, has seen its stock drop from a $13 high to now about 50 cents. Ouch. So it stands to reason that these 2 companies, who together make up practically the entire iBuyer segment, will collapse in 2023 as home prices continue to drop. This will flood the market with the inventory they already can't unload, and voila, total price collapse, huge housing market crash. That's certainly the argument that MHFIN is making. But gosh, if only there was a way to figure out how many homes these 2 companies currently own. Then we'd know if this coming inventory dump is a flood or maybe just a trickle. Wait a second, Opendoor and OfferPad are both publicly traded companies, meaning they're required to disclose their financials on a quarterly basis. Surely, MHFIN, with his long history of videos about the stock market, is aware of this. He couldn't have made his scare video without looking at Opendoor and OfferPad's financials, could he? No, that would have been just irresponsible. MHFIN would have been doing a disservice to his audience were that the case. Anyway, here's Opendoor's Q3 2022 financial report, the most recent available, in which the company reports an inventory of 16,873 houses. OfferPad isn't quite as transparent, but on their balance sheet they report $1.184 billion of inventory. Divide that by the median home price of $380,000, and you're looking at about 2,850 homes. So together, Opendoor and OfferPad hold about 20,000 houses in their inventories. Worst case scenario, both companies go belly up at the same time, and an inflexible bankruptcy court requires them to list every home in their inventory immediately. Boom, 20,000 new listings hit the market all at once. What would be the impact? Well, let's just look at the numbers. The National Association of Realtors estimates that 5.13 million homes were sold in 2022 and forecasts 4.77 million homes to be sold in 2023. On average, there were 1.1 million homes for sale on the market at any point in 2022, and we expect about the same or slightly more in 2023. So, worst case scenario, both iBuyers list all of their inventory at once, and we see active inventory increase by 20,000 homes, from 1.1 million to 1.12 million. an increase of 1.8%. By comparison, 9.36 million homes entered foreclosure from 2007 to 2010, driving up active inventory to 4 million homes. We would need about 150 open doors and 150 offer pads to go belly up at the same time to generate the same level of inventory. So this potential flood of inventory from collapsed iBuyers is actually less than a trickle. It's an entirely insignificant drop in the bucket. And that's the secret that fear-mongering forever renter YouTubers like MHFIN don't want you to know. iBuyers, despite all the hype, are tiny relative to the size of the housing market. Ruby Homes did a study and found that iBuyers made up just 1.3% of home buyers in 2021, and well under 1% of buyers in previous years. Even intellectually dishonest YouTuber MHFIN must know this, as he used this chart in his video about the investor-led housing crash, showing that at peak in Q3 2021, iBuyers accounted for just 1.6% of purchases. Hopefully, this also puts to rest the narrative that iBuyers, by overpaying for their inventory, manipulated the market and drove up home prices. Exposed charlatan YouTuber MHFIN really dramatizes that false narrative for us.
They were attempting to buy up entire cities, even if it meant losing some money on each house. What this did is that it created an environment where prices soared. iBuyers were purchasing hundreds of thousands of homes and relisting them for absurd amounts of money, inflating entire markets.
Is it possible that iBuyers, who bought 0.34% of homes in 2020 and 1.3% of homes in 2021, drove this insane nationwide appreciation? And by winding down their activities in 2022, heralded a 12% peak-to-trough price decline? And that when these companies go under in 2023, the entire market will go down with them because of the 20,000 homes they still hold in inventory? Or is it possible that low interest rates, high demand, and extremely limited inventory drove price appreciation through 2022, at which point a literal doubling of mortgage rates corrected the market to the tune of 12%, and that, in fact, iBuyers were small market participants, not market movers, and their demise in 2023, if it happens, will have practically no impact on home prices? I'll let you decide. I'm just presenting data and facts. If you ask me, the investor class that actually owns enough of the market to make a difference is the corporate landlord. Invitation Homes, Blackstone, these are the companies we should be worried about as home values plummet. And that's the topic of part 2 of this 3-part series, Will Investors Crash the Housing Market in 2023? Subscribe and stay tuned.